Sunday, July 26, 0840 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Talking about technology stocks, technology sector, best performing for the year-to-date performance. Year-to-date performance would be the first trading day this year to the most current trading day of this year. The first situation is to understand the will advise individual investors, the people that manage other people's monies as well, such as mutual funds, investment funds, index. The good ones, the ones that know better than other ones, that the S&P 500 stock index is the go-to stock index that you could compare, that you should be comparing the performance of your equity, aka stock portfolio to. So we'll look here first on the S&P 500, the performance, and then we'll go to technology to see if it's performing equal, better, or worse. We're looking at three grids here. The far right is a 5-year chart monthly. So currently, again, we're in the month of July. It's not over yet. Got a few more days, and they'll be finishing the monthly time frame. But we're almost over for the month. And look at this on the far right grid. We haven't taken out the high or low of the prior month. Small trading range. Very small compared to the prior 2 months. We have made a lower high. Last month was the high of the year. We reversed from the lower highs. Again, we're not done yet for the month, but that's concerning. We may be seeing a reversal or retracement. The middle chart, the weekly, lower high, lower low. We close red. We close below the close of the prior week and below the low of the prior week. Yeah, that's more weakness on the downside. And the daily chart. Well, Friday, we did this. Bullish pin bar, higher high, higher low. Tested the gap, but we haven't filled the gap. So that's the current situation with the S&P 500 stock index. Now we're going to dissect it and look at the technology, which is one of the sectors inside the S&P 500. And within that sector, we'll break it down by industry. So we'll start off with the higher time frame, the monthly. The far left is the NASDAQ 100, the second most popular trading stock index after the S&P 500. NASDAQ 100 stock index is part of the S&P 500. Hear that again. This stock index on the far left here, the NASDAQ 100 is part of the S&P 500. Think that. Understand that. So similar to the S&P 500, again, lower high, lower low for the monthly on the far left. But we already broke the low of last month. And again, bigger trading range than I showed you on the S&P 500. So in the S&P 500 stock index, we have 11 sectors, one of them being technology. Technology, this sector, is so close to the correlation of the NASDAQ 100. But again, it's a stock ETF, so you could trade it. So if you don't want to trade the NASDAQ 100 stock index, which the symbol is QQQ, triple Q, you could trade the sector that has less. Again, NASDAQ 100, 100 companies, and the stock ETF technology XLQ has fewer than 100 companies in it. Similar trends down. Again, they're very similar because the weighted average of the indexes. Well, one of the sectors in the S&P 500 is the SMH semiconductors. Again, the stock symbol for this stock ETF for semiconductors is SMH. Yep, last month was the high of the year. This month, lower high, lower low. Broke the low of last month already. So that's a correlation here. Last month, each of them had the highs of the year. and they already broke the lows of last month. Then we have DRAM, memory part. Again, memory is a industry of technology. So you have computer processors, right here, SMH, one of the industries of the technology sector. Again, the technology sector here, XLK. But we're focused on these two industries, the chips, SMH, and the memory. Again, memory is some talking heads in the industry are saying now memory is more important than the chips. Again, they're both needed for the technology we use on a daily basis and going forward in the future. More memory, more processing power, the more you can expect to get out of your tools. Give you an example, cell phone technology, the old school, cellular G1 technology, then G2, G3, G4, G5. G4 technology, not every country had, so they couldn't all use rideshare services. Not every state had that, so you couldn't use rideshare services. In my community, we have self-driving cars by a few companies, but that requires us to have 5G. My community has 5G tower network. They are not just using 5G, that's part of the thing. So they're using 5G for what? For mapping, construction, to know what's going on in situation aware, but they're using other satellites, cell phone towers. So they're doing a combination of utility poles, utility technology to help those self-driving cars. But the point is that technology, self-driving cars, needs more modern technology. I've been to countries, and in certain countries, they never had even ride shares, because again, they didn't have the technology in those parts of the country. So this is the monthly. Let's go take it to the lower time frame. It's kind of like zooming in, taking the lower time frame. The weekly chart. Far left, the NASDAQ 100. Look what we did. We broke a swing low and closed below a swing low. That's more bearish. And almost a big solid body. That's more bearish. Very concerning. XLK, the technology sector, that prior week broke that swing low, but closed above it and had a wick showing buyers stepping into technology. And for the week, we closed with inside candle. That's good. Potential reversal. So this might reverse to the upside sooner than the NASDAQ 100. Taking into the semiconductors, same thing. Look, SMH here and the XLK, again, is heavily weighted towards the semiconductors, very similar. And the memory, DRAM is the stock symbol. Yep, broke below it and inside candle. So very similar. But they are better, showing better signals of buyers than the NASDAQ 100. And we'll take it down to the next lower time frame, the daily. Far left, the NASDAQ 100, that yellow horizontal line, that's the high of the year. We've gone really far away. And here, look, there's a gap that hasn't even been tested yet. And on this daily chart, you can see we broke that swing low and closed below it. Where the XLK, the sector, we haven't even tested the swing low. We did on a daily chart, lower, 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 high. We have some buyers stepping in here. The semiconductors, here, again, same thing. We haven't even tested the swing high. And the memory. Yep. So again, the point is, within the NASDAQ 100 stock index, we have industries that are stronger than the overall stock index. And these industries SMH for the processing and the DRAM for the memory. There's a bunch of companies inside those. You probably heard of a few of those. You can check those on your own. The point is, owning the stock ETF of these, aka indexes, you're much more diversified than being in one stock. Let's take this to the intraday. And because the stock, we'll look at the intraday on a 30-minute, see how it went for Friday. The far left, the NASDAQ 100, last 30-minute candle, inside candle, but closed again near the lows of the day. And actually, let's expand this a little bit more. There we go. XOK, the sector. See, there's some buying activity, extended hours. This gray area is extended hours. And SMH, the memory, same thing. There was some buying activity here. And DRAM, the memory, went even lower. But nothing big panic selling on them after the extended hours. It's on Friday. Thank you as always, spending just a little time with me. That's it, video. Thank you, Connie, for watching and supporting.